Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of NIO, ticker symbol NIO. And so I wanted to do a follow-up from last week's video because we did arrive at the bottom as I had suspected, right around $6, hitting a low of $5.80 on, let's see, January 22nd, so that would be yesterday, as I'm recording this in the after hours on January 23rd, with a closing price of $6.21, being up nearly 4% on the day, having a range on the day following yesterday's close up to about 14%, but then a little bit of a pullback, like I said, closing up almost 4% on the day. And so I just wanted to go over basically how it does look like price has been residing in this falling wedge that I see here, and the bottom was just tested at $6. Also, it does look like the RSI was recently below 30 at 28.15. As of right now, closing the day, January 23rd, with an RSI of 32.79. And so, yeah, I'm just going to zoom in on the chart so we can get a little bit of a closer look at the price action. And so the last video that I made was on January 16th, following this big red candle day with a nearly 9%, 8.65% down day. We did get some what looks like consolidation towards $6. We did get this hammer candle that did pierce below not only this white trend line that is serving as the bottom of this wedge, but also this yellow line at $6. So we did get a pierce of that on January 19th, which would be last Friday. And then we did get an open and close below both of those levels yesterday, which does look like this inverted, bearish hammer candle. However, that is, and Friday's hammer candle are both at the end of what looks like this downtrend, so that both of them do suggest a reversal. And that is what we got today on January 23rd. Like I said, gapping up and going up nearly 14% on the day, but then closing at this low of $6.21, the low of the day actually being $6.17. So that doesn't look so great. It does look like there might be a little bit of a pullback and a possible retest of $6 and this white downtrending level. I do think those could be great buying opportunities and could serve as confirmation of a breakout, a break above these levels, with them now acting as support for a continuation higher in the days and weeks to come. So that is what I am guessing. But, it is quite possible we don't see a pullback tomorrow. It's quite possible that we do see a continuation higher. It is tough to say, but my guess would be if we do see a retracement to $6, I think that would be a great buying opportunity, as we still do have this gap to the upside at $7.16 that was formed between January 12th and January 16th. We also do have this very small gap up to right around $9 a share. However, before we do get there, I do think that there is going to be a lot of price action that needs to be broken through, as we can see from this volume profile on the right. Once we do get above $7 a share, there's a lot of consolidation above that level. It's going to be tough to break there. So it's actually not surprising that we did get a rejection from the high today of $6.88. I do think that we will need some consolidation below, showing strength above these two levels, above $6, before we can get a launch and a break above $7 a share. Also, one thing that I do want to throw up is a Fibonacci retracement. I do think that will explain or offer some guidance in why we were rejected today and future levels that we could be looking forward to. And so, I'm just going to line this up from the top here at $9.57 down to the low of yesterday at $5.80. Just going to line it up just right there. And so what we can see is the 236 retracement is at $6.69, and we did get a rejection from that level on the day. So, it's not terribly surprising that we saw that. And so what I would expect, like I've said, is a bit of consolidation right around $6 before a retest of that level, a break and hold above. And if we can get a close above $6.70 right around there, I do think that we could start to form a bull flag, some bullish consolidation that could then break higher to fill this gap at $7.16, and then ideally close above the next Fibonacci level, the 382, at $7.24. So that would be ideal. We also then have these other levels moving higher. One that stands out to me beyond the 50% retracement at $7.69 is the 618 retracement at $8.13. Coinciding with this line that I have drawn here at $8.11. And that is really based on just the low that we saw on October 9th, and it looking like that served as resistance following that, a number of wicks up to that level, but being rejected. So with that also being the 618, I do think that will be a key level to get to. But like I said, there's a bunch of consolidation resistance before we get there that I do think is going to be tough to break above. And then before I close this video, I do just want to put this on the weekly candles. While the week is not over, we only have 2 trading days, 3 more left to go in the week. One thing that does look nice about this chart is we do see these 3 red candles coming down. But for the candle that we're seeing thus far for this week, while it does look like an inverted candle, since it is at the base of this downtrend, it is quite possible that the candle for the week could suggest a reversal if it maintains this formation, or if we start to get higher closes, especially if we can close above last week's open, which was $7.04. If this week can close on Friday above $7.04, that would be a bullish engulfing candle for the week, and that would be extremely bullish for NIO moving forward. And I do think that we could start to see prices moving up to test the top of this wedge right around $11, $12 in the near future. So those are my thoughts. And if you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.